Welcome to The Explainer. Today, we're diving into the timeless wisdom of Benjamin Graham's classic, The Intelligent Investor. Specifically, we're tackling one of the trickiest questions out there. When it comes to your money, who can you actually trust?
So, let's get right into it. But before we even touch stocks and bonds, let's start with a simple story. Imagine you want to learn to play basketball. You know you need a coach, but you've got a few options floating around.
First, you've got your friend. He offers you tips for free. But let's be honest, is he really an expert? Then there's the club pro. He'll teach you for sure, but his income depends on how many lessons you buy. And finally, some star player promises to make you a pro in 6 months for a massive fee. You see the problem? You're surrounded by people who want to help, but every single one of them has their own agenda. And that right there perfectly illustrates the core dilemma for any investor.
And this, right here, is Benjamin Graham's central warning. Most people dishing out financial advice have their own skin in the game. It's not that they're all dishonest, not at all, but understanding the why behind their advice is absolutely crucial if you want to protect your own interests.
So how in the world are you supposed to navigate all this? Well, the good news is Graham gives us a really powerful framework. Think of it as a hierarchy of trust, a map to help you evaluate every piece of advice that comes your way.
And here it is. This is our map. It basically lays out the entire landscape of financial advice, from the people you should probably ignore all the way up to the most reliable sources. Don't worry about trying to read every little detail right now. We're going to use this as our guide and walk through it step by step. Okay, so let's get our hands dirty and actually walk through this thing. We're going to start at the very bottom of the pyramid, the riskiest places to get advice, and work our way to the top.
So way down at the bottom you have your friends and relatives, and Graham, he doesn't pull any punches here. He says their free hot tips are usually about making them look smart, not about providing you with well-researched advice. On the other end of the spectrum, you have your commercial banker. This is your safe, sensible, conservative choice. They're trained to be careful and will probably point you towards steady blue-chip stocks, not some crazy startup.
All right, moving up a level, we hit the brokerage firms. And this is where it gets interesting, because there's this major built-in conflict of interest, right? Their brokers make money on commissions when you trade. So the more you buy and sell, the more money they make. Graham says it's basically like asking a car salesman if you need a new car. He might be an honest guy, but he has a very powerful reason to say yes.
Okay, as we climb higher up this ladder of trust, things start to split a bit. On one side, you have financial services like Moody's. These are great for getting the hard facts and data on a company, but they are terrible for trying to time the market or predict what's going to happen next week. And then you have what Graham calls the gold standard, investment counselors. Here's the key. They charge a flat annual fee, not commissions. This aligns their goals with your goals. Their job isn't to make you a millionaire overnight. It's to get you steady returns and, most importantly, protect you from making huge mistakes.
Look, here's the bottom line. Even with these super respectable players like investment bankers, you got to remember what their job is. They help companies sell new stock offerings, and they get paid a commission to do it. So at the end of the day, they are salespeople for that specific product, and that just means you need a healthy dose of skepticism.
Now, Graham's wisdom is, it's as true today as it was decades ago. But commentator Jason Zweig, who updated the book for our times, he adds this really practical checklist for figuring out when you should actually go find professional help. Just take a second and look through this list. Does any of this sound familiar? Maybe your portfolio is getting hammered, you can't seem to control your spending, or everything you own is in like 3 tech stocks. Or maybe you're one of those people who panic sells the second the market hiccups. If any of this rings a bell, an advisor can provide the discipline and structure that will probably pay for itself 100 times over.
Okay, so let's say you've looked at that list and said, "Yup, that's me. I need some help." Great, that's a huge step. But now comes the really hard part. How do you find someone who's actually on your side?
Here's your game plan. Step 1, ask people you already know and trust for referrals. Then, you become a detective. You Google their name with words like complaint or lawsuit. You check their official records with the state. You actually read their legal disclosure forms. And finally, the golden rule: trust but verify. Call every single one of their references.
All right, we've covered a lot of ground. So let's boil all of this down to 5 big truths. Think of these as the core mindset of an intelligent investor when it comes to getting advice.
Truth number 1, and this is non-negotiable. You have to know how your advisor is getting paid. following the money, it's not cynical, it's just being smart. It's your best line of defense, period.
Number 2, you're paying for safety and steady normal returns, not for lottery tickets. If anyone promises to double your money, they're not an advisor. They're a salesperson selling a fantasy. Real investing is about building wealth slowly and safely, so just turn around and walk the other way. Okay, number 3 is a big one, and it's all about you. You've got to know your own personality. Are you a defensive investor who just wants to set it and forget it? Or are you an enterprising investor who's willing to roll up your sleeves and do the extra work? The right advisor for you totally depends on your answer.
Our fourth truth kind of brings us full circle. That free advice from your buddy? Well, you know the saying, it's often worth exactly what you paid for it. Professional, conservative advice that you actually pay for is almost always the smarter bet for your future.
And finally, number 5. The very best advisors are not flashy. They're actually pretty modest. They're honest about what they can do and, just as important, what they can't do. They promise to protect your money and get you reasonable returns, not make you rich overnight. And that kind of honesty, that's everything.
So at the end of the day, it all comes down to this one question you have to ask yourself. When you go looking for advice, are you truly looking for a guide, for real, honest counsel to help you through a complicated world? Or are you just looking for someone to tell you that what you wanted to do all along was a brilliant idea? Your answer to that question changes everything.